All right, good morning, everyone. Let's get going here. All right, interesting night, interesting session last night. It's a pity that we were kind of closed yesterday. Also had some big moves in the back half of the European session. Yeah, obviously you can see there we had some vicious moves there at the beginning of the day during Janet Yellen's talk to on the economy, and we saw initial sell-off, a real push lower. We pushed down about 0.75% on the S&P, about 1.3% on the Nasdaq, only to start to really reverse those losses and grind higher from there. We had she made a few different comments saying that interest rates would be kept low for extended period. Markets would continue to be accommodative. Then we also saw some of the sorry, hold on. Okay, so then we also saw some changes to her statement. We saw some changes saying things like we're going to the job market's been picking up. We've seen a reversal in the job market. We're probably going to see better growth in 2014 than we saw in 2013, and so on and so forth. So we really kind of saw a little bit of a change to some of her statement. That being said, she was dovish in certain categories. She made some comments about the housing market, basically saying that housing was good, was soft, and much softer than expected, and a bit of a reason to worry. And she was also a bit dovish about about the kind of timeline before she had made maybe 6 months after asset purchases were closed, and she kind of steered away from that today. So a bit of a mixed bag in what she gave us, and it was really interesting the spread that we started to see between risk assets. We saw gold shares and gold prices really come off, as well as some of the physical commodities, but then we saw a lot of the diversified miners that traded incredibly well. So a bit confusing reaction on the back of it. This morning in Asia, we really saw a rally kind of across the board. Obviously, we kind of missed out on the sell-off that we saw, on Tuesday's session in the States. So now we're kind of following on to a real strong day. So we have had a down day in between and an up day since we've been closed. So we'll just have to see how the market kind of takes that going forward. But definitely, we had some better expected jobs numbers, and really kind of got the Australian currency going again, kind of breaking out to the upside. And then we had Mitsubishi in Tokyo that rallied after beating earnings as well. So we had a little bit of support from some external factors there, but bottom line, definitely a little bit of a follow-on, I think, on the back of rally in the States, maybe a little bit of relief after Janet Yellen. All right, this morning we had Gold Fields that came out with earnings, first quarter earnings, the all-in costs. They said were $1,114. It's about $100 less an ounce than Harmony. We had headline earnings per share that came in at 1 cent per share. Expectation was for slightly higher than that, and then revenue was at 715. Expectation was for 738. So maybe a little bit soft in Gold Fields from what Bloomberg consensus is. As of this morning, we had the industrial production from from Germany. A bit of a miss. We also had a big miss in manufacturing numbers out of Germany yesterday, but had no impact on the market whatsoever. Then we have Halifax house prices out the UK, with industrial output in Spain. The big things today, obviously, the BOE and the ECB, which are going to announce interest rates today. We've got manufacturing production here locally, and then we've got initial jobless claims a little bit later in the States. So definitely a little bit of a mixed bag, and we'll have to see how what the market's going to be focusing on today. But bottom line is, after the Janet Yellen speak yesterday, I think we don't have any more real clarity than we had before. Because she did change quite a few of the statements there, but some more hawkish, some more dovish. All right, let's get into the maps. Okay, the first thing that I wanted to have a look at this morning is actually the U.S. long bond. There we go. You can see the 30-year Treasury out in the States. We're going to actually have a look here and just show you the real head and shoulder setup that we have. This is kind of come and gone to an extent in terms of the fact that we've already really dropped the neckline quite a while back of this head and shoulder pattern on the 30-year. But I think it's really important. We're continuing to get better than expected data out at the moment in the States, and Treasuries are interest rates, and we're looking at the interest rate when we look at this, not the price of the bonds, are continuing to fall. And this, earlier this year we saw all interest rates really kind of pushing higher earlier in the year, kind of looking like we were getting ready to make a breakout, and then all of a sudden, as the data improves, everything's looking good, and we've seen a real reversal here. And it's quite a puzzling trend that's happening, and we've kind of seen that in a few of these risk assets as well that you would have thought would have reversed as we would be maybe having more of an outlook for interest, a tighter interest rate policy. So that I think is really important. The next one we're going to have a look at to go along with that is the Japanese, the U.S. dollar yen cross. The last few sessions have really just kind of been trying to decipher where and how the markets are going to start to move. And what they're really focused on. You had the yen yesterday that was really at critical levels, and you can see there managed to hold and really made a reversal off of those levels. Sort of after things looked like they were, we might start to see a punch through. We might start to see some a breakdown from this level. The thing for me is that this is totally counterintuitive to what some of the other risk assets are doing. And as we talked about over the last couple of weeks, we've seen a real separation in the performance of these risk assets. So the yen, which should weaken under risk on scenario, it should weaken under the scenario that money is going to stay loose for a long time. It's actually strengthening. Sorry, because we're looking at the dollar side of it. This is inverse. This is actually the yen that's strengthening here, which makes very little sense considering it's doing total opposite to what U.S. Treasuries and some of the other risk metrics would be telling us. So this is actually really important. It's something that we're going to need to follow going forward. The next one that we're going to look at here this morning is the NASDAQ. And we looked at this chart a little while back, and after coming back to it yesterday, you can really see here we have a very, very symmetrical, clearly defined head and shoulder setting up right now in the NASDAQ, with 4,000 being the neckline here. And this is going to be one to watch very, very closely. Saw last night, obviously we had a turnaround on markets, but you kind of lose it in things that the NASDAQ actually still finished down over 0.25% on the day, and tech stocks really have not felt healthy. And in fact, they've felt just downright horrible for a long time. If we drop 4,000 on the Nasdaq, I think it can really get the nerves rattled in markets, and could potentially bring us quite a significant sell-off. So I think we're gonna need to pay attention to that. Over the next the next little period of time, and see how this one plays out. All right. Let's jump into MediClinic. We're going to look at a 2-year on MediClinic. And what you can see here is really we had a beautiful consolidation pattern happening in MediClinic over the better part of a year, really. We're looking at this on a 2-year chart, and you can see there really popped out to the upside on incredible numbers on Tuesday. High volume, all those good things. We haven't really crossed into positive territory. Positive. We haven't crossed into new all-time highs yet, but we've definitely broken out. 76 was really that level. You can see there, if I zoom a little bit further forward, we definitely closed above 76. We definitely closed above that trend resistance. And I think watching today is going to be very, very key. I think today could be, it could be a good one to look for a second day play sometime today. All right. The next one we're going to have a look at is Truworths. And what I wanted to show in Truworths is simply there's a couple things that are looking significant. One, you can see there we're right at trend line resistance. It really doesn't matter how you draw it. We can draw it from the closes, but either way, you can see there we kind of failed on trend resistance as of Tuesday's session, and made a bit of a reversal, toward the very end of the session. But what's also interesting as well is if you look at this breakdown that happened from the beginning of 2013 going into June with that real steep sell-off, you can really see there how we hit right on our fib retracement levels at about 61%. We made a reversal. Once we got to there, we started to reverse back down to the downside. Now, if I can overlay that again and look at it on the most recent rally, we saw this next leg down that was vicious. We went from $100 to $65, and then you can see yesterday. On Tuesday, we tested right at trend resistance, right at that 61.8% fib retracement level again, and then we've kind of reversed a little bit off of that. I think it's really incredible. It's really pertinent to watch. There is another, kind of inverse head and shoulder setup here that's moved to the upside, which actually has a higher target, maybe closer to $90. But this is definitely, to me, it's somewhat interesting to take note of these. How this failed at the fib retracements last time. This is also right at trend resistance. So I think that one is somewhat important for the day. Guys, I had a couple other ones lined up here, but my machine just restarted, and I can't find my laptop restarted. I can't find my other notes, so I'm going to have to cut it short there. But watch closely today. This is going to be a very important day, kind of the follow-on on Janet Yellen's speeches yesterday, to see how markets are going to be able to follow through on the back of that. It's going to be very important. That's it for today, guys. Thanks a lot.